noobs and professionals from all over the world. I know you think the economy will never recover. I know that everything is doom and gloom. However, I have 5 stocks, actually, that you guys should be not only watching, but possibly buying during these recession times and during this crazy economic collapse that we're actually experiencing. One of the worst economic times in the stock market in the history, like dating back into like the early 1900s. It's insane what we're going through. Don't panic. Listen, if you follow this channel, if you have followed, I'm sure, several other channels that preach the same philosophy, long-term investing is what we do here at this channel, and honestly, these are the times that we wait for. Oh my God, are some of these stocks on incredible discounts right now. Some of them are still on my watch list. Some of them are stocks that I'm going to probably be buying here the next week or 2 weeks, depending on what's going on. Things are only going to get worse from here, so these stocks are going to come down. A lot of these stocks haven't been beaten down nearly as much as the rest of the market. They're holding strong. So I'm going to go over 5 different stocks with you guys, and I'll tell you why I think you guys should either watch or buy. And again, always do your own research. Don't just take my advice. Don't just take what I'm saying. Please look into these companies for yourself. Take a look at their financials, just like I'm going to be doing with you guys. And please do your own homework. So without further ado, let's get into it. Okay, here it is. Stock number 1. Like I promised, Intuit is the stock. Ticker symbol INTU. This stock is going for $201.83 right now, with a dividend yield of 1.05%, which not too bad. The fact that it pays dividends is pretty good. The price, I know, $201.83. You might be thinking, that's a little steep, but trust me. Let me explain, let me get into some more details and show you why this stock is either on a watch list or a buy list right now, okay? So let's expand this. We're on the 5-year chart right now, okay? So this is the last 5 years of performance from the stock, and you can see that it's gone up, okay? Now, right now it's trading for $201. It was basically at a high of, low 300s. So it's come down a lot, but it has not taken a beating like the market has taken a beating, or like any other stocks have taken a beating, okay? So this stock definitely has more room to come down. I personally do not own the stock right now. I have owned it in the past. In 2018 I did, actually, and that's where my watch list comes into play. I'm personally going to start picking this thing up around like the 160s and 170 range. Once this starts coming down to there, I'm going to start loading the boat with it, because this stock, guys, ladies and gentlemen, let me tell you, this stock right here has virtually no debt. Yes, you heard me right. During these times, during this recession, during this collapse, when everyone's over leveraged, when everyone messed up on their balance sheets, Intuit did not. They held strong. They did not give in to the temptation of over leveraging. They have so little debt, it is basically zero. So without further ado, let's get into some more details about Intuit. The first thing I want to show you guys before I start getting into the financials is who are their competitors. So the first thing I do is I Google search Intuit Incorporated competitors. If you do that, you're going to go into Google. I'll backtrack for you guys right here, okay? If you click on this page, it will show you Intuit's CEO. It'll show you what their annual revenue is. It'll give you don't read too much into this. This is like not the most accurate and up-to-date possibly, but well, it is based on the last SEC filing, so it's pretty accurate. But the CEO approval rating, I mean that's pretty high. But take it with a grain of salt. What we want to do is we want to come down here and we want to see what their competitors are based on revenue. And as you can see, Intuit doesn't have competitors, really. I mean, look at this. H&R Block, everyone knows who they are. They are in the market space, but Intuit is far above anybody else, okay? So from a competitive standpoint, they're looking down from a mountain that's so high, it's ridiculous, okay? So let's get into the second thing, which is basically what their company is, which is it's Intuit. They have many different online platforms and many different platforms in general that cover a wide variety of businesses. So they go after small businesses, big businesses. They go after personal people. So taxes, they help you with your taxes. They have many different platforms. And if you go onto their website and you go into their actual investor relations page, you'll be able to go into the latest 10K report like we always do, and it'll take you to this page, okay? And what I really want to focus on here for you guys right here, right now, is just the bare necessities when it comes to these 10K reports. This is what I really like to focus in on, because this kind of really sheds a lot of light on the fundamentals of the business, how they're operating, where their money's kind of being allocated to. And if we go back here, I believe it's page 52. I was just on page 52, so such an idiot. What I want to focus in on here is their total net revenue, okay? And their total net revenue, this is $6.7 billion that they're bringing in, okay? And if you compare that to what it costs to actually run their business, so total cost and expenses, this covers selling and marketing, research and development, which is one of their biggest ones, right? Selling and marketing and research and development, R&D. So they spend a lot of money in marketing. They spend a lot of money in researching what the biggest and next product lines are, and building their platforms out, which is what we want to do, because that's what builds growth in the future. And that's what's going to make them sustain leadership into the future. But you can see that their total expenses is $4.9 billion. So that means their net revenue, they are producing more money than they are expending. So let's get into the most exciting part right here. If we go down page 54, that's what's going to bring us into our debt. Okay, what I want you guys to focus in on is two things. Short-term debt, that's $50 million. They can write a check right now for that. If we go down to their long-term debt, we're not even looking at $1 billion, not even $500 million. We're looking at $386 million. These guys don't have barely any debt. Barely any debt. Look at their cash and cash reserves. I mean, they're looking at $2.1 billion in cash. They can pay off their entire debt without even denting their company or their cash. So as you can also see, their cash flow steadily increases. Their debt remains actually steady to decreasing. I mean, this company's balance sheet is by far one of the best balance sheets that I can find so far. I mean, there's a lot of good balance sheets. Intuit's not the best. I'm saying it's one of the best. We're going to get into a couple others. But Intuit stock is definitely one that you guys are going to want to really focus in on and really put on your watch list, because once it starts dropping down and reacts the same way the other markets are, where we're starting to talk about a 50% loss here, possibly even more, this is going to be the one that you guys are going to really want to focus in on and start deciding whether you want to put some money towards this company and build a position. Okay, so with this, that's going to segue us into stock number 2. All right. Ladies and gentlemen, stock number 2, like I said, we're getting into this one. PayPal is number 2, okay? Ticker symbol PYPL, currently at $86 flat. Now, if we expand this and we go to the 5-year, which we are at, we can see that this stock has as well gone up just like Intuit. Actually, its performance is pretty identical to Intuit, but you can see that the high it got up to was around like $122.99, maybe $123. But we are currently down to $86. This is a stock that I do not own. I have never owned PayPal. However, now that the PayPal numbers and the levels are starting to come down, this stock is incredibly intriguing because PayPal is very strong as a company and as a business. It's going to continue to grow. So this is a stock in a company that will continue to be around. So if we get into it, PayPal, same thing goes down. Google search PayPal competitors. What you're going to get into is annual revenue 17.8 billion. We're talking about a big company here. This isn't any small small cap company. This is a very, very large company. If we come down to the competitors, we can see that a lot of their competitors are small cap companies here. I mean, they don't have very many competitors. You can see that Intuit, the company stock number 1, is in their space, but that's a smaller portion of Intuit's space, so it's not like they're like uber direct competitors. They do battle, but it's not anything to concern yourself about. But as you can see, 17.8 billion is riding high among just about everybody here. So competitive wise, they don't really have much going. They have a moat around them. They continue to expand their business, and they are very aggressive. So if we go into PayPal's website, we go into their investor relations, just like we did, rinse and repeat, ladies and gentlemen. We're going to pull up their 10K here, okay? So what we're going to focus on is their amazing balance sheet. That's what I'm trying to bring you guys here, are companies that have strong balance sheets during these times. But then as we go down this list, I'm also going to show you some companies that are going to have some tremendous growth potential in the future. But their balance sheets might not be the best, but they do and will hold up through time. So back on PayPal, what we can see here is their total assets that they have for their entire company is $43.3 billion. Their current cash and cash equivalents, that's what I want to focus in on here, guys. That's very, very important. In 2017, they were at 2.8 billion. That is not chump change. That is very serious money. In 2018, they made a tremendous leap to 7.5 billion. They put $5 billion almost in the bank. Okay, that is impressive. You just don't see that from companies nowadays. Okay, you just don't. If you go down to their total liabilities, you can see that their company is producing almost double what their current liabilities are. So this is a very self-sustaining company. This is a very strong company. This is a balance sheet that you really want to see. You can see that their long-term liabilities, their debt, $2 billion, ladies and gentlemen. This is another company that has virtually almost zero debt. They can write a check today and clear their debt. Okay, this is a strong company that will go and persist through the times that we are experiencing. This is why I tell you guys, we are long-term investors, and this is exciting. These are companies that are strong and that are coming down because the entire economy is coming down. So we can buy them at a discount, and we can reap the benefits over time. Okay, so going through their balance sheet, I mean, this company is absolutely impressive. I love everything I see about them. I know that their CEO and their management team has been doing the right things. They're pushing this company in the right direction. If we go back, we can see that they don't pay a dividend, which is a big reason why they're able to put a lot of cash onto their balance sheet, because, you know, strong companies don't do stock buybacks, and strong companies don't do they don't have to do dividends. Now, strong companies, very strong companies and old companies, yes, that having dividends shows strength if you have great balance sheets. Okay, this is a company that can afford to do a dividend, but what they're doing is they're preparing and they're making their company solid. They're making their balance sheet solid, so in the future they will be able to pay dividends. And then when they do pay dividends, you will know that this is an actual strong company that has dividends that will sustain itself. Okay. Plus PayPal is always constantly trying to expand, so they're putting their money to good use. But this is a phenomenal company to take a look at. So stopping with this one, we're going to segue into stock number 3. So let's get into that. Alrighty, stock number 3. We got Ulta Beauty here, ticker symbol ULTA. This stock is currently sitting at $148.06. And the reason why I'm excited about this company is for a couple different reasons. One downside, does not pay a dividend, but that's not a deal breaker by any means necessary. So let's expand this, and we're going to get into some exciting numbers here. So as you can see, Ulta Beauty has been on a tear, and it got as high as almost $360, and now we're down to $148. So we have taken that 50% dip, if not more, actually more than that. Now Ulta Beauty, if you guys don't know, they play in the makeup market. So they do have brick and mortar buildings, they do online services and things like that, but they do play in the makeup department. So they are getting hit very hard with everything that's been going on with the markets and the economy shutting down the way it has, everything. So this stock is something that you guys are definitely going to want to take advantage of, not just because it's been going down so much. Okay, calm down. Let's get into it. Rinse and repeat here, ladies and gentlemen. Google searching competitors. They are in a pretty big market here. So they're going to have some pretty big name competitors here. They are playing at the $7.2 billion revenue. So this is a big cap company here, but they're going up against people like Walgreens, even though, you know, it's a pretty big company. L'Oreal, Mac, but they're smashing Mac. So when it comes to like direct makeup people, except for L'Oreal, they are very competitive, and they are probably what it looks like second to L'Oreal. So they are putting up a very competitive fight, a very compelling story as to why we should either put this on our watch list or put this on our buy list. And let's get into some financials to start backing up some of this little statements that I'm making. Now, the one downside I did have to Ulta Beauty was, man, getting to their 10K reports was kind of frustrating. So just type in specifically Ulta Beauty 10K reports, and it'll bring you to this. And then you're going to go into their financials, and we're going to go and take a look at their cash and cash equivalents first is what I want to focus on. Okay, so this is in the thousands. Don't get as excited as I did. I thought this was in the millions, and I thought I was looking at some incredible numbers here at first, but no, this is in the thousands. So that's $409 million that they have in cash and cash equivalents. So they do have quite a bit of money on hand, which is good during these times. But what they do have is liabilities. However, if you look at their liabilities, they are minimal compared to their total assets. Their total assets double their liabilities, which is phenomenal. That's exactly what you want to see in a balance sheet. You want to see total assets over total liabilities. You want to see about a double in total assets when it comes to liabilities. Now, you're not always going to get it, but man, if you can, it's exciting. It really is, honestly. So their long-term liabilities, look, they got $28 million in long-term liabilities. Most of their stuff comes with rent and things of brick and mortar buildings, having to pay off accounts payable, things like that. That's what's accruing most of their liabilities. So just keeping business running. But as you can see, their total liabilities versus their total assets, it's a home run right there. So this company overall is very, very strong. They are going to get hit in this market. They are going to, well, that stock price I can almost guarantee is going to come down quite a bit more. So this stock right now is definitely on a watch list for me. I'm not necessarily loading the boat on Ulta. If it drops down into the lower 100s, boy, am I going to start picking that up, because we're going to start talking about 2016 numbers here. Holy smokes, we are right now. Look at that, man. That's amazing. Jeez, that's 3 years worth of progress that you could just make up for. Look at that if you buy just right now. But I'm going to wait for this to come down a little bit more, because I know the markets are going to have to come down a lot more, just because there's a lot more negativity that's going to have to come down. You know, job losses, etc. haven't even been factored into the long-term equations just yet. So once this comes down a little bit more, I'll probably start buying this. But even right now would not be a bad time to start building a position. I wouldn't go putting all of it into it, but starting a position here, man, I wouldn't hate it. I mean, long term wouldn't be bad. So let's segue into stock number 4. Okay, so stock number 4 is probably going to be my most biased and probably my most excited one. I love this stock. I love this company, to be perfectly honest with you. It's Tesla, ticker symbol TSLA. This is like my baby company. I mean, this is one of my biggest positions in Robinhood. As you can see, I actually have 2 shares. This is just like a savings account for me, basically. But yeah, I do have 2 shares at $2.95. I purchased it, I think, like over a year and a half ago or something. But right now, the company is selling for $424.50. This is probably one of the biggest names going around in stocks, so I'm sure you guys have probably heard of it. They play in the automotive company market, but they are electric and they are highly disruptive and they are everywhere and their cars are beautiful and everything they do is phenomenal and rainbows and all the best things you can possibly say. But when it comes down to their financials, this is probably going to have to be classified as borderline speculative. Although they are, and they have proven themselves and their business model to be not only successful but highly profitable. So it's not going to stay a spec stock forever. This is definitely a stock that's on the rise. If we expand to the 5-year chart, this stock has been through roller coasters, man. I'm telling you, it jumped up to $900, ladies and gentlemen. Yes, $900, and you have no idea the numbers that are floating around out there as to how high this company possibly could go. So the sky's the limit for this company in my mind. However, it's dropped down to $424.50. I want, before I start purchasing this company more, I will be perfectly honest with you, I will not probably purchase this company until it drops back down into the low 300s and the 200s, because this company, I know it's worth a lot more than that, but I know that this economy is also going to be in a lot worse shape. And although this company is holding strong, it's going to go down even more. At least I hope it does. Although as for right now, I can't purchase anything more than what I've bought into. I think my buying average cost is like $236, so I want to stay around there. I don't want to elevate it too much more. So let's get into the competitors. Obviously, every car company you can think of, so I'm not going to go too far into it. $24.6 billion is what they are playing with. When it comes down to their financials, first and foremost, man, their website is beautiful. I mean, just take a look at some of the stuff they got. I mean, just going through their cars and stuff is phenomenal. But looking at their balance sheet, getting into their 10K, you want to go into their investor section and go to page 2. It'll be down at the very, very bottom. It'll take you there. We're going into assets and liabilities. Their total assets does outweigh their liabilities. Their cash is phenomenal right now. They have stockpiled a lot of cash, $6.2 billion. That is up from last year's $3.6 billion. And their long-term debt right now, they are looking at $2.6 billion, but that is down from $2.7 billion. So they do have long-term debt, but they have enough cash and enough assets to cover anything they need to go through to sustain this weather and make it to the other end. the most exciting thing about this company, honestly, folks, is the fact that the gas company, gas vehicles are going to be obsolete. In my biased opinion, take what I say with a grain of salt, please, but I personally think that. So this is going to be the time where a lot of those companies are going to start going out of business, if not borderline out of business. So this is actually where Tesla is going to gain more market share, I actually believe. So if I can pick this stock up more, once it hits 200, I am going to buy so much more, it's going to be ridiculous. But even low 300s, I might even dabble. Who knows? But Tesla, that's going to segue us into stock number 5, which is Berkshire Hathaway. Berkshire Hathaway is, well, if you guys don't know Berkshire Hathaway, this is the company that is owned, the CEO is Warren Buffett, the legendary man himself, okay? This isn't just necessarily this isn't even really a company, this is a straight up conglomerate, okay? This isn't really classified like other companies. I mean, this is a company that owns several hundreds of different companies, either full outright or partially owns, or has large stakes in them. I mean, Berkshire Hathaway has their hands in just about everything when it comes with the market. So their stock is extraordinarily exciting when it starts taking a dip, because this is probably one of the most self-sustaining companies out there. This is a conglomerate. This is one of this is a company that just investing in and of itself is almost a diversification because of how many different companies it owns. So it's extremely exciting when Berkshire is starting to dip down as low as it is right now. It got up to 230, which is phenomenal, and we're down into price ranges that we haven't seen since 2017 and back 2016. Okay, so these are very exciting times when you can get a company like Berkshire Hathaway for $168. That's something that just doesn't come around a whole lot. This is the guy that wrote the book on investing, so to say a balance sheet is going to be good is a far cry, because this guy right here, well, let's just get into it. I mean, his competitors, this is going to be weird because his competitors are just about everyone. I mean, they're going to show you a bunch of, because his main asset that builds the most money for him is Geico, so they're going to show a bunch of different like insurance agencies, but really his company owns so many different things. You can't really say he has competitors. Getting into his, I mean, not getting into his financials. Look at this thing right here. I mean, this right here is this is the companies that he owns, wholly owned companies and significant stakes in. I mean, this is a straight up conglomerate. Look at everything you are investing into when you invest into just this one company. And no, this is not an ETF. This is just one company. So you get Wells Fargo, you get Geico, you get airlines, you get Fruit of the Loom. You want boxers, son? No, I'm kidding. Let's get into financials though. When it comes to a balance sheet, I mean, they are stacked with cash that could start another country. So they are dealing with $630 billion to play around with, okay? Just in cash alone, $61 billion, okay? This is not your average company. Just straight flat out, I would definitely highly recommend that you guys do your research and look into this company. This is definitely a company you guys should very much get excited about. This may be number 5, but this is one of best for lasts when it comes to companies. So definitely exciting to see this company start dropping down. Definitely going to buy. I actually own shares into this. I bought into this in 2018. I think the price right now is lower than what my average cost is. So I'm going to start purchasing more stocks probably next week, along with a couple other companies. So this is definitely one I'm very, very excited about. So that right there is all 5 companies. Yeah. So I know this took a long time, and you guys know I blab on for forever. So the last 2 stocks I kind of had to shorten up a little bit, but I tell you, man, those last 2 stocks aren't anything to just skip over. So go back, look at these balance sheets, look at these companies. I hope you guys learned something. I hope you guys took away something from this. And if anything, please like, subscribe, follow me, do what you guys got to do to show some love. But that's going to take us away. And I appreciate the support, guys. So have a good day and stay safe out there.